All right, everyone, welcome back to the midweek market wrap up. As always, we're going to go through stocks, we're going to go through crypto, we're going to go through forex. We're going to try to figure out what's happening out there in the market. In this one, and maybe going forward, depending on the response, we're going to shorten these up a bit and focus on the majors. The reason I'm doing this week is because what happened on Friday. So we're probably going to spend most of our time talking about that little sell off that we had on Friday, and again, what that could mean going forward. Now, if you checked out my episode that I did on Wednesday, then I talked about how I kind of didn't really expect this particular sell off, but I expect this kind of drop and then, maybe bounce later, this kind of choppy action going forward. So if you missed that, you can go back on wherever you're seeing this. You can check that out. You can go to my Substack and you can find that as well. I just called it the election crash. So I just want to preface everything with that. During election seasons and during this time in election season, the specific time right here between September and when the election is done, you get some choppy action. The market is unsure of what's going to happen next. I've shown the stats. It doesn't matter really what side ends up winning. But for this period of indecision where no one knows what's going to happen, you get this choppy action where maybe the market overreacts one way or the other to news and earnings report and this and that and the other thing. But all of this, again, is perfectly expected, exactly what we're going to see. I even talked about how I'm going to use StatsEdge Pro to trade with this. And I'm going to show some of the trades that we've taken and how they're doing. Again, I love the fact that I trade systematically and with algos. So after I do this video, I'm going to do that video for StatsEdge Pro members, and that's going to get sent out as well. So all of that over at StatsEdgeTrading.com if you want to check that out. Again, make sure you're getting access to that. If you're trading right now and you really need guidance and you don't know what you're going to look at, I use algorithms to backtest and say, hey, if you do this and you do this over a long run, it ends up working and outperforming the market. And then from there, we use our own discretion, we use our own eyes, we look at things like seasonality to kind of help smooth out those results even more, knowing that we start with a statistical edge. Could not trade without it. So, let's just get started. And as always, we're going to start with Bitcoin. But the reason that I'm talking that I'm not going to go through everything is because you'll notice that a lot of things, especially in this weekly chart, especially on Friday, look a little bit different. So here I have Bitcoin. I've been talking about this base for a long period of time and about how this fake out candle was pretty interesting because we faked out below potential support, which was also a little bit of this area back here. And that if we end up popping back through, that was interesting. We spent a couple weeks just kind of chopping around. We came back down. It looks like we're snapping back up already. So, I'm just looking at this as we have this giant consolidation going on here. Not super interested one way or the other. Again, full disclosure, I took a little bit of Bitcoin yesterday, just kind of right at this level. You can see we have the area that I've drawn out. We also have the anchored view app from this major low right here. So I just took a little bit of a shot, but these are very short-term trades. I mean, for a good sustained Bitcoin move, of course, we need to see some action outside of this wedge in order to get going, right? We're still inside this choppy range. So for me, I'm just not really super interested one way or the other, right? And again, if we go look at everything, a lot of this is going to look the same, right? We had this big dollar just dealing with this, sorry, this is the dollar index, just dealing with this support level, chopping back and forth. So not really much of a tail at all from the currency front. What we ended up seeing though, if we just pop into my trade ideas here, we had this sell off right here in the SPY. And this was pretty much everything that happened in the market. As I went through sector after sector, I went through my entire ETF list, over 150 charts, to try to figure out what was happening on Friday. But just everything sold with the market. It was a pretty everything day. If we take a look, for example, at the RSP, which is our equal weighted S&P 500, that was down as well. So this isn't weighted to big cap tech. So it means that everything across the market had a pretty bad day yesterday. This was down 1.7%. If we took a look at semiconductors, that's really where the bleeding starts. So what we need to focus on, and what I have been kind of focusing on and telling, is the lower high that happened here. Remember, the SPY got pretty much back to all-time highs. Not quite through it, but it got back to about all-time highs. So the SPY looks like a boat like this. And with the SMH, we bounced and we made a relatively lower high and we sold off, showing that we have some relative weakness here in the semiconductors. So Nvidia, SMCI, all of these semiconductor names that were leading the markets before are not. Right? But if we look at a lot of just pull up some random sectors, we have XLE at lows, even XLF, which had been a darling recently, that sold off on Friday. Still relatively strong with XLF, right? I drew out this line because I want to watch this level when we pull back, but pretty much everything sold off. Now, what's going to happen next? So, again, on Wednesday, I went and I showed a chart and it showed basically what each individual sector or what each individual election year, so the year of an election, if you kind of mushed all those together and you said, okay, what's the average election year look like? It looks like this. It looks like in September, you start to have some shenanigans where from September until November, quite often those are weaker months anyway, and just the whole seasonality kind of landscape. But specifically for election years, is they are incredibly weak because you have the general seasonality weakness, and then on top of that general seasonality weakness, you also have a specific seasonality weakness with, again, no one knows what's going to happen in the election. People aren't really interested in making large bets one way or another. A lot of cash is raised, people waiting to see who's elected, and then maybe they'll implement a strategy. Again, I'm Canadian, I've got no dog in the fight, I don't really know the positions of everyone, but say one candidate is pro weed and one candidate is anti weed. It's a very simple example. What these hedge funds, a lot of these institutions will do is they'll raise a lot of cash. They'll sell things that have been doing well and they'll raise a lot of cash. And then if person A is elected, they have a whole basket of securities that they want to buy because they think over the next 4 years, I think is till your next election, that these sectors are going to do very well, and then maybe within these sectors, these stocks are going to do well. And if person B is elected, they think this is going on. So a lot of this is happening in the hedge fund game where it's okay, I need to pick out who I think is going to win, and then if that person wins, this is what I think is going to happen. So that's what's happening here overall. That's why I'm not too worried about it. I would not be surprised at all if we spend the rest of September, which we have 3 weeks left, and into October and then maybe November inside this range that I've drawn. So here's your lows, and then here's your highs, and then we have sell offs and then bounces. Maybe we break all time highs a little bit and then we sell off, or maybe we even break this level by a little bit and then we bounce. I'm still, and I have been, and when we were bouncing here, I was very, very wrong, but I was talking on CNBC and Trader TV and my Substack and everywhere that I could listen, that everyone where people could listen, that I think we're going to be range bound for a while. And I still think that that's the case, that we are going to potentially be range bound. So, what does that mean? What do we do as short-term traders? What do we do as investors? If, again, I am right and continue to be correct about this range bound action? Well, we simply change what we're doing a little bit. Before, I'm very much one that I like to buy strong stocks, hold those strong stocks, and carry them higher. That might not be the environment for this right now. The environment is more buying dips and selling rips. So, just I'll tease with some of the things that we've got on the go, but a couple of the trades that I took going into Friday was like this one, MNKD. So this came from a list that we have that's looking for pullback trades that's based off a pullback trading algorithm. Let's see if I can actually find it here. I think I probably have it. I've got a lot of tabs going on here. Well, here it is. It's actually right up here. So this uh, green line right here, this is the pullback trading algorithm. So you can see the blue line is the S&P 500. So draw this out. So this line here is what happens if you invest in the S&P 500. And then this line here is what happened if you invested in this pullback strategy. So what happens is at the end of every week, it gives you 10 symbols and says, if these symbols get to this price, look to get involved. I don't just buy them there randomly, again, using your discretion, using your eyes. But if they get to this price, you're going to look to buy. Here's where your stop loss goes, and then you hold them for a week or so. But again, that's discretion on the way out. So with mankind, the price was right here. We had this wicked week last week. It says, hey, if it can pull back into this area, look to buy it. I was pulling back, and as this is bouncing on Friday at the close and the market's still selling off, I bought some. So this is kind of the play that I'm a little bit more interested right now. So if you're not interested in checking out StatsEdge Pro and you just want to look at the kind of names that I'm looking at, it's these kind of thing. Here's Kava that I took a couple weeks ago, which what I'm looking for is if we are going to be in a choppy environment where the market's going to sell down harshly and then bounce, I'm going to be looking to kind of participating in that with this algorithm that does pretty well in these types of environments. That's the beauty of systematic trading. The beauty of back testing is I can go back and I can look and I can say, right, in choppy markets, how does this algorithm work? If this one works fantastic, that's the one I want to lean on in that market. And if this other one maybe doesn't work so well, then I want to avoid that one or even just trade it with smaller size during this market. So Cavo was the same way, big push up. The algorithm kind of alerted and said, hey, if it can get back down to this level, take a shot. It got back down, spent 3 or 4 days there. That's where I bought and starting to move up here. So stop loss real tight on this as well. So just what I'm trying to get at, and what I'm trying to articulate here is that I don't think that this is a big bad bear market. If we lose that prior low, that yen crash low on the SPY, and we trade significantly below it, I have to start reconsidering that maybe we're going to be in a little of a prolonged downtrend. I'm expecting chop. I'm expecting the market to sell off sharply, kind of the way it has been, and then put in these bounces. So what I'm doing is I'm making these lists of stocks based off algorithms, or you can do it however you'd like, of if they get to XYZ level, that's where I want to get interested in, and I want to buy it as it's coming down, and then maybe use a 30-minute chart, a shorter term chart to look for some sort of reversal off that. But by doing that, instead of just buying highs and continuing to do what people have always done with big cap tech, just buying every time they break out. If you have these plans in advance, it makes it much easier when the time comes. Set your alerts. Something great you can do in trade ideas, you can just right click, set an alert. If it comes down, your screen beeps and it just yells at you and says, hey, this stock that you liked before is hitting the price that you like it at. Maybe consider taking a trade, take your trade. And then the other side of that is because I think we're going to be in a choppy environment, I have to be faster at taking profits. I'm one that I know kind of my problem as a trader is greed. I never have a problem holding on to my winners. If anything, I hold on to my winners way too long. So in this environment, I'm just reminding myself, hey, Michael, you think that it's going to be choppy. If it is going to be choppy, when you get these bounces and they start working for you, just be a little bit quicker to take your profit. I already do a decent job taking my losses. I have a loss already built in when I set out the trade. Just be a little quicker in taking your profits. And these little adaptations will make sense. Now, to complete the seasonality talk, after November, I mentioned it doesn't seem to matter who wins, but once the market has certainty, generally you get these trends into the end of the year and then into the beginning of the next. So once we are done with this election choppiness, it will probably be going back to the other algorithm, which is more of a breakout trend continuation style. So make sure that either you have multiple styles from multiple markets, or if you don't, then make sure that you are knowing when your style isn't going to work. If you only have one thing that you do and you do that over and over again, I don't think it's necessarily a bad thing, but what you need to just understand is that when that thing is not going to work, well, then you just need to make sure that you're not doing anything. There's nothing wrong with going to cash, saying the market's a little wild right now. I'll check you guys in a month or so. Just again, make sure you have that discipline if you don't have these multiple styles to switch at. So a little less flipping through charts, a little bit more of me rambling this one. Let me know what you guys think. Go to StatsEdgeTrading.com. You can sign up for the free email list to make sure you're always getting a video. You can sign up for StatsEdge Pro, where you can get access to the output of all of these algorithms, a chat room I have, a live Q&A I do, and member-only videos. So thank you guys very much for checking it out. And until next time, get away from the screens.